Hello, this is Steven Yi. It's been a while since I have used the Redfin updates. Before I go over the headline for the Redfin update, I'm going to share with you the daily news. The mortgage rate, as you can see, today is the 18th of March, and today's rate, according to Mortgage News Daily, is 6.55%, which is a increase from a few weeks ago as a result of the banking crisis within Silicon Valley Bank. But yeah, the mortgage rate has been pretty volatile because back in October, as you can see, back in October of last year, the mortgage rate were in the low sevens. That caused the demand to drop quite significantly. Then for the remaining few months, the fourth quarter of last year, the rates, as you can see, were hovering around the low 6%. Back in February, a few weeks ago, the rate dropped all the way to 5.99%, and that created a lot of new activity in the housing market. Then, before you know it, for the past month, the mortgage rate back in January went all the way back up to 7%, and now it's back to 6.55%. That's good news. I see some buyers are quickly jumping into the market, and we have seen some activity have jumped up, and people trying to lock in the low rate, 6.55%, before it gets worse. That's what we're seeing, the short-term volatility. With that in mind, let me go over today's headline, which is the Redfin home prices fell 1% in February 2023, the first annual drop since 2012. I just want to caution you that it's interesting the way the articles are always somewhat misleading. So my job is to unwind and give you some real data as to what's really going on. Before I go any further, just look at this chart. We're seeing the most significant things that's going on right now is that the homeowners right now, as you can see this chart, 40% of homeowners have their houses free and clear of mortgages. Clearly, they are staying put. They're not going anywhere for the rest of their lives, most of them. The remaining 65% of them had a mortgage rate of 4% or lower. Further, 24% of all the mortgages have mortgage rate of 3% or lower. This is mind-boggling. This is the main reason we're not seeing any housing crash, because in order to have a housing crash, we need stress in the housing marketplace. And based on people have a lock-in effect, they're not going to move out of this property, sell the property at 3% historical mortgage rate to move up to a 6.5% mortgage rate. You're not seeing move-up buyers. It would be crazy. People have very little to no motivation to move up from even a 2.5% 30-year fixed rate mortgage to a 6.5% mortgage, where their mortgage payment will be double or more, and yet the move-up house they might want to buy could cost more. The only way some of these people can sell their homes, or people who have mortgage rate maybe around 4%, 4.5%, 5%, and the only way they're going to potentially sell, if today's current rate moves down below 6.5%, below 6%, probably around the mid-5 or even at 5% mortgage rate, before some of these mortgage holders going to give up their amazing historical low mortgage rate. I hope you understand where this is coming from. This is the foundation. The current homeowners, believe it or not, they are dictating the housing market. That's what it's all about. By the way, if you receive by the end of this video, if you receive a lot of value, please smash the like button and subscribe to my YouTube channel. And also quickly visit my website and drop your email into the form to subscribe to my real estate investing Turkey newsletter. Once you join our network, you will receive weekly housing market updates concerning investments. With that in mind, let me go back to another segment and go back to the headline. Again, home prices, according to Redfin, fell a measly 1%. Okay, that's not much. And why this headline exists is a 10-year low of home prices falling a mere 1%. Because since 2012, 10 years, for the past 10 years, we have seen consistent home prices increases. The housing market has been very robust in the past decade. And right now, these past 9 months or so, we're seeing some correction. But bear in mind, real estate is very local. Although Redfin and few other mainstream resources, they talk about national market, but don't fall into the trap of thinking the national market pretty much dictate everything what's going on. No, real estate is very hyper local. Every market is different than another market. So I want you to put that out there. Some of the headlines based on the yellow highlights I have here is many sellers, according to Redfin, were also hesitant to enter the market. New listings fell to the lowest level on record aside from the start of the pandemic. So that basically is telling you what I just told you, that many sellers are sitting on their low rates. They're gonna age in place for a long time to come, or the 30-year fixed rate mortgage historical low. Okay, let's move on. The median U.S. home sales prices fell a whopping 1.2% in February, which is a little bit more than 1% year over year. I know the first quarter and a half of last year, 2022, because the mortgage rate were still very low, around 4%. We have seen double-digit appreciation in the first half of 2022. Then, of course, when the rate skyrocketed from 4 to 7% in the last 2 quarters of 2022, we have seen less demand. We have seen price drops, especially in the higher price marketplace, which I will share with you later. If we factor in year over year, technically speaking, home prices have found only 1%, which is a 12-year low. So again, I caution you to look beyond the headline, whether the headline comes from Redfin or any other resources out there. You have to dive deeper into the article to decipher what is misleading, what is not misleading. All right. Does that make sense? So I'm here. I don't do clickbait like Lana Crash Bros video does out there. I am much more ethical and moral. I can't see myself using doom and gloom clickbait situations. That's not me. I have too much ethics for that. Anyway, so another highlight I want to mention, the housing market shifted in March following the collapse of Silicon Valley Bank. Once again, all the doom and gloom headlines, people saying that these banking crises may affect the housing market. I don't think so. I don't know what's going to happen in the future, but the government sometimes they step in, they try to help out with these several banks that have went belly up. Hopefully a temporary situation. But the good news is the Federal Reserve and what have you seen that this crisis has occurred with this bank. The mortgage rate was reduced from a high of 7% 2 weeks ago, now down to 6.55% based on mortgage in New Zealand for people that have good credit. We're seeing higher mortgage application, people jumping in. Now, one more thing I want to share with you, you may not have noticed. I know over the years, I have promoted many the market for my real estate investors to buy cash flow properties. And many of the markets I no longer recommend because the prices have gone up so much and the rental prices have not caught up. Most of our real estate investors are buying in the low cost markets in the Midwest and South and Southeast. But I have cultivated many realtor relationships over the years. By the way, this kind of information, you're not going to get it from the mainstream headline. I'm telling you the real scenario, what's going on. I've talked to many of my friends, real estate agents that are in many different markets, like in California, Bay Area. And not only that, I know agents in Austin, Texas, in Las Vegas, in Phoenix, Arizona, and many other the Sun Belt locations. You know what they're telling me? They're telling me that the entry-level homes, the homes that are below the median price in their respective markets, they are selling like hotcakes. Think about it. Entry-level homes are the most desired. There are very limited inventory available. There are only like a little bit more than 3 months supply of inventory. That's what Redfin has stated on this article. But some market, they have, especially the lower end entry level homes, they have inventory of less than 2%. The lower end, like $200,000, $300,000, $350,000 single family home, and the lower end or the lower price, the median price in all these markets that I just told you about, they are seeing bidding wars and multiple offers. Not going to be crazy like back in 2021, but typically there were like 5 to 7 offers per house, and people are bidding over the list price by around 5 to 10%. That tells me the market is still very resilient in spite of this negativity and doom and gloom headlines perpetuated by mainstream media. Negative news sells. And unfortunately, the people in YouTube, they monetize the channel by using the crash videos and clickbait to get a lot of subscribers. They're making a lot of money. They're being extreme capitalists. Nothing wrong with that, being a capitalist, but you have to be careful the sources that you're getting your information from. Let's get back to my information here. As I go through this article, Redfin, new listings in February were the lowest level on record aside from the start of the pandemic. See, new listings, they fell by 23% year over year on a seasonally adjusted basis and were down 3.5% in the prior month. Once again, home sellers, they're not putting their homes on the market because they have locked in amazing mortgage rate so they can keep their homes forever. Personally, I have a lot of houses, rental properties everywhere in the country, and after refinance a lot of those homes at 3% 2 years ago. I'm not going to sell those houses. My rental properties on cash flow like crazy. My rents are growing up. Why would I want to sell on this market? I'm going to keep my houses forever. My primary home and my rental properties, and many of our real estate investors, hundreds of my real estate investors that I guide and serve with, they are doing a buy and hold bills. They have very low mortgages, and there's no way they're going to sell their homes. Why should they? When you're locking at 3% and we want to move up to sell at 6.5% and double their monthly mortgage. This is absolutely crazy. That's why you're seeing some the trending is that there are very low supply of inventory, and things are not going to change. But we could continuously low the supply of inventory, and with the mortgage rate going to go below 6.5%, 6%, 5.5%, 5%, you can see some housing frenzy you have not seen since 2021, maybe. So right now, it's very little competition. Right now, still a little bit of a buyer's market in certain market. Who's to say you can afford to buy a house somewhere in the U.S. if you want just have this long-term commitment, stay at your house for 7, 10 years and beyond. Who's to say you should not buy a house to live as a primary home? Who's to say you should not buy investment property on it to cash flow to a good rental market, which I'm still consulting my investors to buy cash flow homes, knowing even the high mortgage rate, knowing you can cash flow over time. So you'll best for the long term. That's the beauty of it. That's how you create wealth. Okay, let's go on with this article. Homeowners have been hesitant to buy the properties for sale because many of them are locked in the mortgage rates substantially below today's level, as I alluded to earlier. Okay, and let me see what else I want to show on this article. So I don't want to go over too much of the specific data. You can also look at this article by Redfin itself. I'm going to segue and share with you right here this market in Southwest Florida, Cape Coral, which I've been promoting for our real estate investors from California in many areas. And we've been buying cash flow properties here in Cape Coral, Southwest Florida. And so every market is different. And Florida is clearly on an upswing. They have not really have any kind of correction in home prices in many areas of Florida, especially around South Florida, Miami, Fort Lauderdale, West Palm Beach, their home prices are continuing to go up at double digit level simply because of the supply demand, lack of supply, very high demand, and the everybody from all over the country, especially the Northeast New York City, and even in the West and from the Midwest, people are converging into Florida because for a lot of reasons. I'm going to go over the Cape Coral market, just go to show you every market is different. I know in California where I live in the San Francisco Bay Area, like cities like San Jose, San Francisco, even in LA area. And prices had in the past 9 months, home prices have gone down 10 to 15%. I get it, but at least temporarily, because they go into a lot of correction. In other regions of the US, it's different. I just want to share with you that just put this by go more to Cape Coral market. Look at Cape Coral market, and it's still a very consistent, fast growing market. And many of our investors are buying cash flow homes at $350,000, or regular homes for $2,500. So they're doing very well long term. We are still seeing a lot of migration into Florida and into Cape Coral area, the region, Southwest Florida. So look at this. Look at back in before the pre-pandemic on this red line 2020, the median price of a home on March of 2020 was $248,000. 2020. All right. And then it has increased 9% appreciation from 2019 to 2020. Then from 2020 to 2021, this market has increased on the average by another 17%. Then from 2021 to 2022, it has increased another 29%. At the peak right here, back in June of last year, 2022, this region, this metro, the median price have gone up all the way to 420. We have a slight step back due to higher interest rate in the last 2 quarters of 2022 down to 386. And yet still year over year, December 2021 to December 22, still have an 8% year over year appreciation equity growth. And then I know the spring market, in every market in the country, spring market, you see very high housing market activity because that's how it is. Every spring, every beginning of the year, people have a lot of motivation to buy and sell in housing markets all over the country, and Cape Coral is no different. So as you can see, throughout the first 3 months of Cape Coral, the home prices have steadily increased. And so to a point where it has already increased by 7% year over year from February 2022 to March of 2023. So you see the trajectory, because the entry-level homes, the homes all over the country that are below the median price in their respective market, they are very limited inventory because of the most homeowners not selling, very few are selling, and the builders are not building enough entry-level homes. There's an extreme lack of inventory, even though the mortgage rate is 6.5%. You know what is happening, especially in Florida? You have foreign investors not only coming to Florida, they come to many different places, but mainly in Florida and Texas. Foreign investors are coming into the market and they're using all cash. Housing to a foreign investor is, quote unquote, is a safe haven. They don't think to buy cash or people all cash or 50% down, because there are some foreign loans available for foreigners out there. And then you have the Wall Street institutions, the corporate landlords, they're coming into the Florida and the Texas market to buy up all these entry-level homes. And just the competition very fierce. Then you have my own risk investment mainly from California that I'm guiding come down to Florida to buy cash flow homes and with 25% down payment. So we're competing against also the first-time buyers as well. People with conventional loan, people with 0% down payment loans, first-time buyers, and people using FHAs. They are, so first-time home buyers also competing for limited amount of inventory in Florida and in Texas and many of the Sun Belt areas. So limited supply and very, very high demand, even with the interest rate, a lot of people paying cash, some people paying 50% down payment. And then the remaining buyers is the most challenging because they are competing against other buyers and they only have a minimal down payment. So that's why we're seeing a bidding war out there in many areas. I challenge all of you that listen to my video to talk to a local realtor, wherever you're located, wherever in the country you're located, and ask them what's going on with the lower entry-level homes out there. What kind of activity are you seeing? And I'm betting you more often than not, the local realtor in your respective market, doesn't matter what area you live in right now, they can tell you, they can say, oh, we're seeing bidding wars. We're seeing a lot of activities. We're seeing bid up 5% above list price. You can hear that. Share with me, comment below, where are you coming from? What market are you in? What are you trying to do? Or you're a primary homeowner, want to buy? Or you're a real estate investor, want to buy a certain market? I want to know where you're listening on my video, where you located, because every market is different. I'm very curious to find out what's going on. Comment below. And finally, the takeaway from this article, Redfin, again, right now is the price drop. 1% price drop is the worst impact for years. Come on, it's not that bad. It's not going to be a housing crash right now because of such a low inventory and people are not selling for the reasons I just told you about. So anyway, it's my job to give you great content, real data, real trends, and not clickbait, very doom and gloom, misleading information just to get more subscribers. I want more subscribers just like anybody else because I want to teach and educate people. So I ask you, if you see a lot of value from this video, please smash the like button, subscribe to my YouTube channel, and finally, visit my website below, comment below. I'll be more than happy to address your comments. And also visit my website, drop your email into the form to subscribe to my weekly turnkey real estate newsletter. Thank you so much for listening. I will see you next time. This is Siwin Yi. Have a nice day. Bye-bye.